Good day, everyone. This is Teacher Dean, and today we're going to cover the accounting equation. Again, the accounting equation. So when you look at the accounting equation, it has some elements or it has some parts to the accounting equation. First one is asset, the second is liabilities, and the last one is owner's equity. Now, when we look at what we call the accounting equation is assets equal liabilities plus owner's equity. Again, it's assets equal liabilities plus owner's equity. And we'll define each one of these terms in the upcoming slides. Now, what are assets? Assets are things that the business owns. So when they own it, they are also called resources for the company, and they have a value. They're resources that have a value. Now, in many textbooks, it states that assets can be physical or assets can be intangible. Physical means you can touch it. Cash, supplies, desks, computer, those are ones you can touch. Intangible are like patents, copyrights, trademark. Somewhere that we know they talk about copyrights a lot, music industry. Always talking about they have the copyright, patents. When you make a product and you don't want anyone to steal it, you get a patent. And those are what we call assets. Other examples are like supplies and prepaid expenses, land and building. Now let's look at liabilities. Liabilities are what the company owes. Again, liabilities are what the company owes. And they are the rights of the creditors and the debt of the business. That's how many people define them, as the rights of the creditors and debts of the business. So liabilities are usually what the company owes. Many times you will see the word payable. When you see those words payable, those are what we call liabilities. But some liabilities don't have that word payable at the end, and you'll see some as we go along. Now, let's look at the next term, owner's equity. What are owner's equity? Owner's equity of the right of the owners. Again, this is the right of the owners. And let's look at some examples. Savings, dividends, and retained profit. Again, savings, dividends, and retained profit. So let's go back and let's talk about these assets. What is cash? Cash is money in your bank account, in your business bank account. That is what you call cash. What is accounts receivable? Accounts receivable is amount that is owed from the customer. The customer owes you money. That's accounts receivable. What is land? Land is property owned by the business. Land is property owned by the business. What is building? Buildings are what you either house or where your office is. That could be your building. And building is something that you may use, or a building may be something that is rented. So that is what we call building. Supplies and prepaid expenses. Supplies and prepaid expenses are treated as asset. Again, the word is treated as assets until they're used up. So what do we do with supplies when they're used up? At the end of the accounting period, they go through what we call adjusted entries. So supplies and prepaids are accounts that we adjust. And when we adjust it, we reduce the supply account and we increase the business expense account. Same thing with prepaid. When the prepaid is used up, we reduce the prepaid expense and we increase the business expense. That is how they are handled. And I use a term that these are done at the end of the accounting period. So what's an accounting period? An accounting period could be at the end of the month. An accounting period could be end of a quarter. An accounting period could be the end of a year. So at each interval, you can close out your expenses, your supplies, and your prepaid expenses can be closed out using adjusting entries. So let's go on and look at liabilities. We talk a little bit about liabilities. What is liabilities? What you owe. Now, we're going to look at what is some of the things that you may owe. Accounts payable. Okay, what is accounts payable? Money that will be paid in the near future. So accounts payable, you're going to pay these in the near future. Maybe 2% in 10 days, 5% in 20 days, whatever it is. But these are money that you can pay in the near future. You may get a discount, you may not get a discount, depending on how you pay it. Now, taxes payable. Taxes payable. Every day we incur taxes. But these are paid when? Maybe quarterly to IRS. So we incur them until we pay them. Then let's look at what we call unearned revenue. Unearned revenue is where you earn the money first. Then you pay the money first, rather, then you earn it. So here's an example. How many of you paid your tuition before you went to class? You all did. Everyone in this class had to pay their tuition first, then they come to class. So when does the college earn that money? When the class began, they earn that money. Everybody understand? Unearned? Unearned, you paid maybe 20 days before, maybe 2 days before the classes begin. But the college earned the money when classes begin. So let's go ahead and look at something else, wages payable. Every day that you go to work, we earn the money, correct? But when does the company pay you? 2 weeks later. The company holds that money until it's time to pay you. That is called wages payable. Notes payable. Notes payable is money that you pay to the credit card. Where you make an arrangement and you pay it. It's an arrangement between the customer and the business. And you may pay within 30 days, 60 days, 90 days, 120 days. Whatever the arrangement is, that is what happens with notes payable. Now, let's move on to owner's equity. Owner's equity are the right of the owners. So these that are at the right of the owners, they're handled differently. And what are they? Their savings, their dividends, their retained profit. Now, we're going to look at some of these things that affect these accounts. So revenue increases your owner's equity. So when you sell a product, you get money. That is sales. In some books, they call that income. But money coming in, it is revenue. It is sales. It is fees earned. A lawyer goes to court for you, he earns his fees. So when you record it for a lawyer, fees and you may be paid by the dollar, whatever percentage. And that is how you would record it for these lawyers. Now, let's look at expenses. Expenses decrease owner's equity. Example, wages. They have to pay wages to their people. They have to pay the utilities. They have to pay the rent. They have to pay the supplies. They have to pay some miscellaneous things, and they decrease owner's equity. Owner's investment is money that the owner put into the business. And what does that money do? It increases the equity. In accounting, the account used to differentiate, or they call it capital. So again, owner's equity is called capital. What happens now? We talk about what increases owner's equity. What would decrease owner's equity? You take out money. Owner's withdrawal, owner's draw. That decreases owner's equity. So again, these are examples of some assets: cash, accounts receivable, allowance of bad debt, inventory, prepaid insurance, truck, building and land, investment in other companies. Those are assets. Let's look at the liabilities: taxes payable, accounts payable, wages payable, notes payable, utilities payable. This one should only be long-term debt. Then we have rent and mortgage payable. Then we have credit cards. Those are examples of liabilities. Owner's equity. We're looking at savings, dividends, and retained profit. So these are examples of our assets, our liabilities, and owner's equity. And until we meet next, I would like for you to study this chart so that you know what is an asset. So I say to you, an asset, you know what is an asset? It's a liability. Here's some examples. You know what is a liability? The owner's equity. Here's some examples. We're also going to look at what do we do with assets? When assets increase, what do? We debit. Somebody say, what is debit? Debit in accounting means left side. Credit. Credit in accounting means right side. So it's a total different definition from your personal expenses when we talk about debit and credit. In accounting, left side is debit, right side is credit. So have an awesome day, everyone. And until next class, go ahead and review, learn, and study. Thank you. Have a superb day.